The race for the future is on, and the infrastructure behind it is getting a massive upgrade. Vast Data has just shattered expectations, securing a massive valuation of $30 billion in their latest financing round. This move cements their status as a heavyweight in the AI ecosystem by providing the high-speed architecture needed to fuel the next generation of massive data centers globally. It is clear that the thirst for advanced computing power is only growing, and Vast Data is positioned right at the heart of the action.
Your brand new iPhone deserves the best protection, and the iLume 3-pack screen protector plus 3-pack camera lens protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
The momentum is spreading across the entire sector, and the markets are feeling the heat. Nasdaq 100 futures are climbing nearly 0.8%, fueled by strong earnings from Intel and a surge in chip stocks that are catching investors' attention. This move shows just how much confidence is flowing back into the tech space as companies continue to demonstrate resilience and growth in a challenging landscape. Hold on to your seats because we are witnessing history in the making with the semiconductor space. The Philadelphia Semiconductor Index, known as SOX, has just completed a historic 17-day rally, marking its longest winning streak ever recorded. While legends like Nvidia continue to lead the charge, we are also keeping a close eye on giants like TSMC, ASML, and the upcoming performance from Qualcomm and United Microelectronics as they fight to sustain this incredible run. Finally, all eyes are on Texas Instruments as institutional activity shifts and financial results roll in. While some firms like Confluence Wealth Services are trimming their positions, the company is still reporting impressive earnings that beat consensus estimates and signals strength in the analog chip market. Dig deeper into these moves and keep up with every major market shift by hitting that like button, subscribing to the channel, and ringing the bell for all the latest updates. Ever wonder what happens when the AI gold rush meets the harsh reality of data infrastructure? It is not just about the GPUs anymore. It is about the plumbing, and one company just proved that gold is buried deep in the pipes. Vast Data just hit a staggering $30 billion valuation after their latest funding round, nearly tripling from $9.1 billion. Think about that for a second. This isn't just hype. It is a massive bet that Vast has cracked the code on unifying data, compute, and real-time processing for the massive AI data centers of tomorrow. As AI models get hungrier and more complex, companies that can actually handle the scale are becoming the real MVPs of the industry. But the action is not just in the software layer. Over on the hardware front, Texas Instruments is on an absolute tear, surging nearly 20% and flirting with its 52-week high after a knockout earnings report. It is a clear reminder that while the AI bubble gets the headlines, the backbone of the electric vehicle and ADAS markets is fueling real, tangible growth. Meanwhile, Winway Technology saw a slight cooling off, dipping about 6%. It is a classic reminder that even in a booming sector, volatility is the name of the game. So, what does this mean for your portfolio? Are you chasing the giants or looking at the infrastructure enablers? If you want to dive deeper into the $100 billion AI chip opportunity, including the outlook on players like Broadcom, or even see if Nvidia is actually trading at a discount, check out our full reports linked below. Remember, this is analysis, not financial advice, so do your own homework. If you enjoyed this breakdown, hit that like button and subscribe for more deep dives into the tech trends that actually move the needle. In a world of infinite data, are you focusing on the noise or the infrastructure that makes it all possible? Ever wonder what turns the tide on Wall Street overnight? Today, the markets are telling a tale of two different worlds. Nasdaq 100 futures are surging, climbing nearly 0.8% as the tech sector finds its footing again. The big catalyst? Intel. Their latest earnings report has sent shockwaves through the industry, providing a much-needed lift for chip stocks that have been under the microscope lately. It is a classic case of how a single player can reignite investor confidence in an entire sector. However, if you look over at the S&P 500, the mood is decidedly more cautious. Futures there are sitting almost completely flat, suggesting that while the tech giants are finding their rhythm, the broader market is still playing a waiting game. It is a clear reminder that while tech momentum is powerful, the wider economy is still navigating plenty of uncertainty. Are we looking at a sustained rally or just a temporary tech-driven bounce? Only time will tell. If you found this breakdown helpful, make sure to hit that like button and subscribe for daily market updates that cut through the noise. Remember, in the world of trading, being informed isn't just an advantage, it is the only way to play the game. 17 straight days. That is not just a hot streak. In the world of Wall Street, that is practically unheard of. The Philadelphia Semiconductor Index, or the SOX, is currently riding the longest winning streak in its entire history, and it is leaving the rest of the market in the dust. While the S&P 500 and the Nasdaq have had their moments, those rallies have cooled off, but the chip sector. It is still red hot, up 41% since the lows we saw during the Iran war jitters. It makes you wonder, is this finally the moment the AI narrative cements itself as a permanent economic force, or are we just watching a massive wave about to crash? The engine behind this train is obviously Nvidia. With a 21% jump since March, it has become the undeniable gravitational pull for the entire index. But it is not just one player. Look at TSMC and ASML. Both are reporting record revenue and hiking their forecasts, citing insatiable demand for AI infrastructure that shows zero signs of slowing down. Even Intel is showing muscle, with guidance that absolutely crushed analyst expectations. But here is the real test. We have Qualcomm and United Microelectronics reporting next week. These aren't just earnings reports, they are barometers for the broader memory chip market. If these companies can sustain the momentum, it confirms that the AI bubble talk from last year is officially dead and buried. Deutsche Bank's Jim Reed said it best. The narrative now isn't about bubbles, it's about a powerful AI-driven demand cycle that's rewriting the rules of the market. If you are watching the charts, these next few days are the ones that matter. Do you think this historic run has room to keep climbing, or is a correction finally overdue? Let me know your thoughts in the comments below. Hit that subscribe button to stay ahead of the next market shift, and keep a close eye on those earnings reports next week. Because in this climate, the data moves faster than the news. Is Texas Instruments still the powerhouse your portfolio needs, or is it time to take a step back? Today, we are diving into the latest moves surrounding TXN, where a flurry of institutional activity and mixed analyst signals are painting a fascinating picture for semiconductor investors. First off, let's talk about recent shifts in ownership. Confluence Wealth Services recently trimmed their stake in Texas Instruments by over 54% in the fourth quarter. It's a move that certainly catches the eye, but context is king here. While they were selling, other heavy hitters like Artisan Partners and Rothschild & Co. were busy adding to their positions. In fact, institutional investors currently hold a staggering 84.99% of the company's stock. That level of conviction from the smart money suggests that while individual firms might rebalance, the overall belief in T's market position remains incredibly strong. Now, how do the analysts see it? The sentiment is truly a mixed bag. We've seen price target hikes from the likes of UBS and Robert W. Baird, with some targets reaching as high as $300, alongside more cautious hold ratings from other firms. Currently, the consensus sits firmly at a hold, with a consensus price target of around $257.68. It's a classic battle between bullish growth projections and conservative valuation concerns. Looking at the numbers, T reported an impressive earnings beat in April, pulling in $1.68 per share against expectations of $1.37. With revenue up 18.6% year-over-year and a solid dividend yield of 2%, the company is clearly performing, though that dividend payout ratio of over 100% is definitely a figure income-focused investors should keep a close eye on. We also saw some significant insider selling recently, with both the VP and CFO offloading shares in February. While insider sales are common and don't always signal a lack of confidence, it's always worth noting when leadership trims their personal holdings. Texas Instruments remains a cornerstone of the analog and embedded processing world, powering everything from industrial tech to your personal electronics. But as with any investment, the question is whether the current valuation, at a P/E ratio of over 48, is justified by future growth. Before you make your next move, remember that there is always another side to the story. While T is a household name, there are other opportunities out there that top analysts are currently eyeing as stronger prospects for the coming months. If you found this breakdown helpful, hit that like button and subscribe for more deep dives into the stocks moving the market. What's your take? Are you holding on to your TXN shares or looking elsewhere? Let me know in the comments below.